with another video helping you answer your questions. The topic of today's video, the question I'm going to be answering, is a question that was posted on one of the socials, a comment that was posted, which I thought was really cool. And I've got it here just because it's quite a long one. So what I'm going to do is I'm just going to read this out and just kind of read the question, and then we're going to go through the answer and discuss how that has an impact on the market. So the concept we're talking about is correlations, so different assets being correlated to one another. And the question is, I noticed today that gold rose as a result of treasury yields dropping. I had no idea that they were correlated. Had I known, I could have gained a lot of pips on gold increasing today, because I actually was already aware early that the yields were dropping, but I didn't know it was correlated with gold. So the short answer to this question is, first of all, in a general sense, lots of different assets and markets are correlated. And the easiest way to explain how and why is all to do with risk on and risk off. So risk on is when the market gets kind of, you'll hear the saying that the market cycles between fear and greed, right? So risk on is when the market isn't scared of risk and it's kind of greedy. It's in its greedy phase. It's going to try and make as much money as it can. So traders will be attracted to those things that give a higher yield. So for example, in currencies, it will be attracted to those currencies that are paying the highest interest rate, okay? So with yield comes more risk. So when you don't care about risk, you're happy to take that risk on, you go for yield. Vice versa, when you are scared about risk and everything's a bit worried, you don't care about yield anymore, you go for like lower yield because you want to go for safety, okay? So you care more about the risk that you have. So in this little question that we have here, specifically talking about gold and bonds, basically, treasury yields, okay, which is US bonds. So what's the correlation there? Well, bonds and gold are both risk-off assets, okay? So if the markets get scared, you might notice that gold prices go up when the stock market and everything's crashing, everyone's panicking, gold prices go up. The value of the value of bonds also goes up. So when the value of bonds go up, the yield goes down, okay? So in exchange for providing you that safety of gold or bonds, you don't really get a yield, okay? And that's exactly what happened in this scenario here. So obviously it was, I don't know exactly what day it was, I don't know what the situation was, but even just looking at what happened, we can see that it was probably a risk-off day. So the value, everyone was buying into gold because they didn't want to take any risk. So the value of gold rose. At the same time, the value of treasuries was going up as well. Therefore, the yields on those treasuries went down. So when you see the yields going down, it's a very good indicator that as long as there's a good reason for it, and this is where you have to look at the fundamentals, the value of other assets, other risk-off assets such as gold will go up. And in the currency markets, a risk-off asset is Japanese yen. So value of Japanese yen goes up when the market's scared. When the market's not scared and kind of doesn't care about risk, it will go for currencies that have a higher yield. So at the moment, when I'm recording this video in 2015, it's New Zealand dollar, Australian dollar, things like that. Or it doesn't matter what currency it is, it's the one, look at the interest rate to tell you the clue. So that's basically answers the question about correlation. So it doesn't really matter which market, it's not necessarily, it doesn't have to be gold, it doesn't have to be bonds, it's all about whether it's a risk on or risk off asset. So if you see, in this example, treasury yields falling, first thing you need to do is look for the reason. Is something happening in the market to cause a concern or a panic? If that is the case, then you've got a very good chance of making some money by buying gold, because you can, if it hasn't started moving, there's a pretty good chance it'll start following. So I hope that helps. It's a really good question, a really interesting question.